Hello friends, welcome to our digital blogger. Today we are going to touch base on a very basic topic. We're talking on why should you invest. We'll talk about positives, negatives, some of the concerns or risks of investing, and finally we'll see what are the different options available in the market for investment. We'll also see what is the opportunity cost you're already going through. Let's start with you. Let's say you are in the age range of somewhere between 25 to 30 years. This is a general age we are taking. It can be plus or minus. And then we are assuming that you are earning somewhere between 50 to 60,000 a month. And then depending on which city you live, be it a first year or a third year, but on an average we are assuming you're saving at least 20,000 a month, which sums it around 3.6 lakh a year, which is a fair number assuming you are in the age range of 25 to 30. Now let's do some basic math. Let's say if you do not invest at all in any option whatsoever, then within the next 20 years, what is the amount you are going to be left with? With the salary hike of a consistent 10%. So again, it's a range. It could be 5% one year or 15% another. But on an average, we are saying 10% is the salary hike you're getting on a yearly basis. With an inflation of 6%, we are sitting in 2017. In 2016, the inflation was around 5%. In 2015, it was around 6%. In 2013, it was somewhere around 11%. So we are at 2017 taking an average for the next 20 years, inflation at 6%. So with 20 years of continuous hard work, you are going to save 1.8 crore. We are definitely assuming that your savings as well as your expenses are going to be at a consistent level. This 1.8 crore are big or small, that is for you to decide based on the aspirations you have for the future. And what does the future hold for you? A future for an Indian family generally holds a kid's education, a house for your own self, and a car. Now, if this 1.8 crore be suffice for these aspirations and more, well, we'll need to look at it pretty differently now. What can you do with the current savings you're making? What options do you have to build up to your expectations in the future? You can start with fixed deposits. Fixed deposits are something which are very conventional and traditional in nature. People have been doing it. You've seen your parents do it, and they give you a saving of 8 to 10% return. But at the same time, some economists do say that they are actually a negative accumulation product, which basically means that probably if the inflation is going to be 10% for a year and your FD is giving you an 8% return, you're actually making a negative 2% return for that particular year. Next investment option can be real estate. In real estate, you have to verify the reputation of the builder, type of the property, location of the property. As far as returns are concerned, there are so many external factors involved. So it is very unpredictable in nature. For instance, demonetization impacted the returns in such a way that the properties in North India and some of the metro cities were impacted by 30%. So that's the kind of power real estate properties can have, and it can be adverse in nature. Next investment option in line is currency trading. Major chunk of population invests in US dollars, while there are few people who actually trade in UK pounds as well as Europe's euro. They want to give you very high returns, but currency trading is known to be a safe investment option. It can give you moderate returns with moderate risks. Then in line we have gold investments. Gold investments are considered to be very safe in nature. At least your capital will be there forever. So this is one of the good part of gold investments. You can go ahead and do it. They'll give you returns in an average range of 8 to 10% if you're especially looking for long-term investments. Then we have investment bonds, which are of three types. Some of them are government issued bonds. Then there are regulatory bodies from government which issue investment bonds as well. And finally, the corporates also issue investment bonds. They are also known to give you an investment return of 10 to 12%, but it also depends on the kind of situation the market is in. Finally, we have the stock markets. So depending whether you are here for a long-term investment or short-term quick gains, you can make a return of 15 to 20% on whatever investments you make. We are just assuming that you know what you're doing and you have everything in place as far as technical or fundamental analysis of your investments is concerned. With all these options, we advise you to put up your money into different baskets and make sure that you pull out of the particular segment wherever you feel the risk is going to be. On a consistent level, you can pull off a range of 10 to 12% of investment, which is not that difficult. So as we discussed on the kind of money you can make without investment at 1.8 crore in the next 20 years, it can be done in the range of 4 to 4.5 crore with all these investment options. So basically what you are doing is you are using your money smartly and getting higher returns out of it. If you are looking specifically to invest in the stock market, you would need a stockbroker. The stockbroker must be registered with SEBI, which is a regulatory body from Government of India. Also make sure that the stockbroker goes hand in hand with your requirements and preferences. In case you need any help whatsoever in stockbroker selection, you can check out our website ourdigitalblogger.com/free callback broker choice. Provide your details there and we'll set up few callbacks for you. This is absolutely a free service. This is it for the video. Thank you so much for watching it. Please press the thumbs up button if you liked it. In case you want to have similar videos in the future, go ahead and subscribe to our channel, Our Digital Blogger. Thank you so much again for watching the video. Have a great time. Bye-bye.